If you don't manage the risk on your crypto trades and investments, you will eventually lose all of your money. It's just inevitable. Watch this video until the very end to learn how to keep track of your risk and manage it like the professionals do, and also how to get for free this crypto trading and investing journal, which you can use to record your trades as well as your long-term investments, to analyze them, and to keep track of your month-to-month results. Okay guys, so here is the position size calculator which comes together with the journal. Don't worry for the journal right now, as promised I'm gonna give it to you at the end of the video. For now I want you to focus on how to use this position size calculator. This position size calculator helps you predetermine your risk, so basically you're gonna know how much you are risking before you even enter a trade or make an investment, right? And the way this works is that you just have to first add here your account balance. So if you have $1,000 to trade and invest in crypto, that's the number you're gonna add right here. The next thing that you have to add is the entry price. So let's say that you are planning to enter an Ethereum trade or to make an Ethereum investment right now at the current price, which is $3,140. So all you gotta do is enter here the price at which you wanna buy it. So $3,141. That is the price for Ethereum. The next thing you have to add here is your stop loss price. This is very important guys, because if you trade or invest without stop losses, you are basically risking everything. What people fail to understand is that the altcoins during bear markets, they go down like 95 to 99%. So for example, check this coin right here, 9inch. It went down 95%. The next coin right here, ACA, same thing. It went down 96%. So you should never invest money in any coin without having a stop loss, because you don't want your investments to go down 99% and to never recover, because yes, many of these coins will never recover, that will just stay down here. Now I would say that this doesn't apply to Bitcoin and Ethereum, right? Because Bitcoin and Ethereum will go up over the long term. So you can actually buy Bitcoin and Ethereum without using any stop loss, without using any, you can just buy and hold as an investment forever. Especially Bitcoin, I'm not so sure about Ethereum, but especially Bitcoin, you can just buy and hold forever without any stop losses. That's completely fine. But if you are buying altcoins like this here, you gotta have stop losses, because otherwise you are risking to lose all of your money. And that's about investing. When it comes to trading, then you should use stop losses always, right? Even when you are trading Bitcoin. Now, having said that, the natural question that you're probably going to have is, where do I place my stop loss? Well, it highly depends, right? If you are doing a long-term investing, your stop loss will be very far from the current price compared to where you are when you are doing short-term trading. So for example, on the trades which I had here for Bitcoin, right, these are swing trades. My stop loss, so for example on this one, is like 7%. Where the stop loss price is going to be really depends on your trading strategy, right, on your style. If you are doing investing, if you are doing trading, what type of trading are you doing? Are you doing short-term trading? Are you doing swing trading? Are you doing position trading, right? What are you doing in general, right? So let's say that your stop loss in this case, let's say that you are doing short-term trading like day trading or some scalping. In this case, your stop loss will be very close to the entry price. So it might be something like $3,100 on Ethereum. So once you add these two things, the last thing that you just have to adjust to this position size calculator in order to get the numbers that you need is basically your percentage risk on trade. How much of your account are you willing to risk on this trade, right? Is it 1%? Is it 0.5%? Is it 3%, right? You have to adjust right here. Now, what people fail to understand, when they hear risk 2% on a trade, they think that they have to buy with 2% of their account. No, that's not the case. What risking 2% on the trade means is that if you lose this trade, if your stop loss gets hit, you're gonna lose 2% of your account, but that's not how much you're gonna buy for. To know how much you're gonna buy with, you have to look at these numbers right here, capital needed and crypto amount. By the way, what's important for you guys to know is that you only add numbers to these yellow cells right here in the journal. You should never touch these cells right here, because there are formulas in it right, and you're gonna mess it. Just remember to always add the number here: account balance, entry price, stop loss price, take profit price if you have, and percentage risk on trade. Now again, it's important for you to understand that when I say you risk 2% of your account on a trade, it doesn't mean that you're gonna buy for 2%. What it means is that you're gonna risk 2%. So in this case, you're gonna have to buy Ethereum for $1,500, which is actually more than the money you have. So how do you do that? Well, leverage. You can borrow the rest of the money, this $500. You can do it in futures, you can do it in cross margin or isolated margin, right? Or if you don't want to borrow, just lower your risk per trade. So you buy Ethereum for $1,132, or you buy 0.49 Ethereum, right? That's why we have here the capital needed in dollars and the crypto amount, right? So because on some exchanges you can't add the dollar amount, you have to add the crypto amount, so you can just use this number. So you buy almost half Ethereum, and then of course you place your stop loss. The next thing you gotta do is to actually add your crypto trade or investment to the journal in order to keep track of your overall risk as well as your results. Now, as promised, let me share with you how you can get the journal for free. There will be a link in the description of this video and in the pinned comment. If for some reason you can't find the link or you can't click it, all you gotta do is just go to Google, type satsincome.com, hit enter. Then once you are on the website, just click on trading journal, and right here you can get instant access by adding your name and your email address. By the way, you're not only gonna get the trading journal, you also gonna get a short online course which teaches you how to use the journal, because there are many features here which I'm not gonna cover in this video, right? But you're gonna get access to this course where you can learn how to use all of these cool things here. That's it for the video. If you found it useful, please hit the like button and also consider subscribing to our channel for more videos on how to trade and invest in crypto like a pro. Boy B is checking out.